you better believe that if stock falls, you have to be normal, which means getting scared when the stock is falling. We get scared too, as Seth said. We do too. Okay, so Fed Chair Powell came out and started speaking. In that time, the market skyrocketed and came back down again. So I'm just going to pull this up for the intraday. This is the NASDAQ today. So it was down at one point today, about 0.2%, hit a peak of up about 1.7%, and now is up 0.65. The S&P, same kind of chart, just different numbers. Down 0.3, up 1.2, and now up 0.37. So, guys, some of the things that Powell said. One, the job market right now is inflationary, and that causes a problem for them. They have to raise rates if they think inflation's coming. The current Fed is trying to fight inflation by raising interest rates, and they've done a great job of it so far. If you look at the last 5 or 6 months, inflation's been very tame. Now, there's some other metrics there on the markets that still cause concern for me. One, I just read by Tobias Carlisle. He looks at enterprise value to EBIT ratio. That's the enterprise value divided by the earnings before interest and taxes. Just hit another all-time high. Just hit another all-time high. We look at the run-up in the NASDAQ and all the hype stocks and all the overvalued stocks in the last month. The run-up has been huge. People feel we're out of the woods. Everything's great. Not necessarily the case. The Fed's number one focus is inflation and the softening of the labor market. You might sit there and say, well, no, unemployment's 3.5%. Let me ask you a question. A year and a half, 2 years ago, did you hear about any tech company laying people off? Now, every single tech company is announcing layoffs. Yes, it's a small amount relative to the whole US economy, but that's not the point. The point is, if I'm a business owner now, and people are hearing, I am a business owner, and the good news is when the recessions hit, we do better, we hire more. But for other business owners who need a good economy to do well, when they hear other companies announcing layoffs and they know their employees are hearing that as well, they can use that as a, hey, times are tough right now. People are getting worried. Recession's on the horizon. Everyone's feeling that way. So it's a good excuse for them. Before it was harder. Maybe it's true. Maybe it's not true. I have no idea. But at the end of the day, what is reality? The reality is jobs are being cut on the tech level. In this time, let's see what the market's been doing. Oh my God, NASDAQ's even. NASDAQ's even. And the S&P is down and the Dow is down. Let's hit refresh here. Look at that, guys. Look at that. Right here. My gosh, it was up 1.7% within the last 1 hour. Let me see when I texted Mo. At 12:55, 36 minutes ago, and said stocks are off. Unbelievable, guys. Unfreaking believable. So what did Powell say? Did he say anything that was big? So look, here's this article. Fed's Powell says blowout jobs report shows inflation fight has a ways to go. There you go.
Let's recap last week. Last week, Paul, it was a crazy week. We had almost 30% of the NASDAQ reporting on Thursday. Fed meeting, making their interest rate decision, which sent markets up and then down and then sideways. And, this is the kind of situation where markets are irrational and we can take advantage of them. I know that we've been talking a lot in the oracles of EM about people that are starting to short right now, just because we have had the most incredible rally. What is it? The QQQ is up 13% right now in the last month. That's the NASDAQ.
Year to date, it's up 15%.
That to me is just totally irrational. But you should be able to capitalize on that. Look at things coming down, just like it was irrational going up. We were looking at Tesla going long. Our friend Mr. Moskal, he bought it going long because that fall down to, what was it, $100 a share or something?
Yeah.
That was absurd. Absolutely absurd.
Yeah, so, guys, when we talk about the shorting here, we're talking about it from a standpoint of technicals.
Standpoint, yep.
Yeah, we're not talking about fundamentals. I actually shorted Meta. I'm not going to tell you where because I don't want you to mimic it. You should not mimic anything I do. I shorted quite a few things because there was too much buying going in. The money flow index was too high. Guys, it's not reasonable that a company should increase, or this entire index should increase 15% year to date. That's just not, even if stocks were below their value. Yeah. Even if I thought stocks overall were undervalued, I'd say, whoa, time out here. Like, that's
Yeah.
A little too much. It gets too much enthusiasm. Something's got to give, right?
I mean, to have Tesla going from $100 to $194 in 20 market days, that is a little bit excessive. And to me, I look at that and say, okay, looking at that price action, moving from $100 to $94 just on Tesla, with a stochastic like this, meaning the trend, Paul's pulling up the money index right now into the NASDAQ. All of these things put together just tell me, yeah, things are going to probably cool down and I can take advantage on that short side based on technicals.
Yeah, so the money flow index was 75 on Thursday for QQQ. The only time it's been this high before is look when it happens. Or when I say before, like in the last year, April, look what happened afterwards. Right here. Now here, this is the part you might be like, wait a second. It went up from here. Yeah, great. And then eventually when it finally broke, it went below those levels. So this could definitely still go up like it did back here.
Absolutely.
But the point is, when you look at the money flow index is a good way to see where is the money flowing. Is there a lot of overbuying or a lot of overselling? Mm-hmm. And look, when you're oversold over here, what happens? Look where the stocks went. Yep. When you're oversold over here, look what happened. Oh, actually this one barely up. So, barely, okay.
Yeah.
But on the, so maybe on the overbought, it's probably the bigger indicator. I don't know. But I look at this going like, damn, that was just, it's such a big run up so quickly.
Yeah.
And sometimes something's got to give.
Yeah. And the news of the day, when you look at the Fed decision, this was like the Super Bowl. Everybody's talking about February 1st is going to be the day. Now I see Jerome Powell is going to be at some economic forum speaking tomorrow. And that's what the market's holding their breath about. So you can't go news to news, day to day. It's not going to work for you if that's all you're hinging on right now.
And remember another thing. I didn't short by shorting the shares. I did call options, which is a lot different. I didn't change my positions. You got to remember that. That's why you should not do this. Your job is to stay in your positions as long as they're at the values that you want them to be at. And there's going to be a lot of up and downs along the way. I'm just telling you this to say, be ready for more volatility. Be ready for up and downs in the market. Be ready for much lower prices. Just remember why you bought the companies you bought. Use the stock analyzer tool to determine what value you have for all of these companies that you pick. If you own Meta and it did a big run up, use your stock analyzer tool. Decide if you're going to keep it because it's still undervalued or not. Even if it's at value, why sell it if it still has a lot of potential to go?
And the funny thing about Meta, there's been a lot of discussion about that one. We have a lot of people that were buying at $88, $100, and now they're saying, this happened so fast, I'm exiting my position. We have other people that are saying, I bought it $100 and I'm keeping this thing because it's a long-term play. So there's no right or wrong answer. It's whatever fits your style that you've come up with. But you cannot just say this is a one-way street. Markets are going to go up forever from here because it's over. This
Correct.
Is great. There's still bad things that are out there. Still good things that are out there. But this is not how stocks go. I'm sorry. It doesn't work that way.
15% a month, extrapolate it out, it's 180% a year. Actually, it's more than that because if it compounds on itself, it's 200+% a year. Guys, it's not realistic.
Kathy Wood didn't even do that in 2020.
Kathy Wood. She's the new NASDAQ. I mean, she's completely. And by the way, she said it last week, coming off her best month in her fund history ever. And she has to be so cocky as to say, yep, we're basically the new NASDAQ. Guys, mark my words about Kathy Wood. Please, I've said it in many videos, she will not be a money manager within 5 years, and she'll claim retirement. She's done everything she needs to do. Just trust me on this one. You go back to every major market bubble. There's always people leading the way because they rode the wave, and they're never around 20 or 30 years later. All the boring dinosaurs that everybody makes fun of, they're the ones still around, still doing well.
Yeah.
That's what I love about the whole thing.
Yeah.
I sent the Charlie Munger quote about EBITDA to our mutual friend, the guy who works at a money management firm that we both love. I think it's hilarious.
Yep.
And I wrote, I know he's a dinosaur, blah, blah, blah. He goes, nobody would hire him. I think he's being somewhat funny, but people view them as literally like, well, the guy's 99 years old. There's no way he understands.
Yeah.
He understands cash flow. Cash flow is the same 100 years ago as it is today. Same 50 years ago. It's always going to be cash. $1 invested is still going to buy you some sort of stream of cash flow.
And that doesn't sound sexy and it sounds boring as hell, but it's what works.
Yep.
And it works over a very long period of time, contrary to some belief.
Yeah, I had somebody run on Twitter recently that I was out of my major positions. I'm like, and the 4 stocks he mentioned, only one I was actually out of. I'm like, hey, pal, I'm actually in 3 of the 4 that you mentioned. I'm in Baba, I'm in Meta, I'm in Intel, and he mentioned Smith & Wesson. I talked about Smith, not Smith & Wesson, Sleep Number. And I'm like, I told people why I'm out of Sleep Number.
Instantly.
I was just like, oh my God, I was totally wrong on Sleep Number. in the sense of where it is today.
Exactly. And it was based on one certain metric in there. But you even said, I'd go back and buy Sleep Number.
Oh, 100% I'd buy Sleep Number.
So it's still good
It's
business,
a great
still
quality
a great
brand. Yeah, but I do think, and you know what the funny thing is? The person, Gary was my friend who I talked to about Sleep Number. The funny part is he talks about how he's a bottom-up investor, doesn't care about the market, but yet his suggestion was, but look where the market's at, look where the economy's at. If it's going to fall, it's going to fall more. I'm like, well, wait a second. I think it's a reason. I think if you own Sleep Number at this price for 20 years,
you're going to get a good return.
You're going to get a good return on your money.
Yeah.
But he was sitting there saying, yeah, but during a recession, this thing can fall and has fallen in the past significantly. It's like, okay, then I'll pull out and wait.
Mm-hmm.
Right?
Yeah.
Imagine how good it'll feel to see markets falling and not have a worry in the world. Imagine how good it'd feel to have financial peace of mind. Imagine how great it'll feel to be able to understand how to read financial statements and impress all your friends when you're able to buy stocks based on facts and not emotions like they do. This is exactly what our software will help you learn and understand. For a little over $1 a day, you can have access to the same exact software that I use in our videos and that I use every single day for my own private investment decisions. It is beyond easy to use. And if you don't like it, in the first 30 days, email us, 100% money back guarantee, no questions asked. Stop worrying about your retirement and future and start planning for it. So begin right now at everythingmoney.com and start planning for your future confidently today, right here, right now.
Something else about the news of the day. Apple was a great example of this. Apple missed miserably on pretty much everything. And now the story out there, this thing was up, 4% on Friday, something like that, on missing on everything, missing on iPhones. The only thing that they really beat on was iPads and service. That was what they beat estimates on. And now it's bad news is good, good news is great. They have found every excuse that they have to justify this price today for Apple, saying that, well, iPhone sales were bad, but we have Apple devices in 2 billion people's hands. Yeah, that's great, but you almost had that before. It's not like they had 1.9 something billion people before that. They're trying to sway the story to make everything okay in the entire market. Don't get sucked into that.
And when was the last time, guys, before 2022, bad news was okay, good news was great.
Yeah.
That's when you know you're in bubble territory. Like everybody's using any sort of news to justify a higher price. Yep. Any sort of news. Oh, it's bad. Oh, it's because they still did better in this area. Okay, fine. And we have to get to the other way where good news is still bad.
Yeah.
And when we get to there, that's when I'll sit there and say, okay, we're getting close to a bottom, or we've already seen bottom. It'll be somewhere near the bottom. Mm-hmm. But guess what? I don't know when the bottom's going to happen. I don't know when the top's going to happen. The point is, we're here trying to teach a process of investing. Do we use things like stochastics and money flow index and things like that? Yeah, as a way of observing where we think the stock, could I be a little more patient? Or if I'm going to sell puts, do I write more aggressive puts? For example, look at QQQ. Now let's pull up Meta.
Okay.
So Meta's at 83 on the money flow index. If I want to sell puts, I want to sell puts at a lot lower prices than if it were down here. If it were down here, I'd be much more aggressive on puts. Why? Because this tells me the stock is more than likely going to go up. Now, did it from here? No, it did not. But there are other areas which it can, or at least get some sideways movement. Because this is 2 months right here of sideways movement. And if I can sit there and write an aggressive put on sideways movement, I'm going to make a lot of money. And if it goes lower, great. I made a lot. So here, for example, if I'd written back here when the market was at 182 and I wrote a put for 180, I might have, for 2 months later, I might have gotten it, but it would have taken 2 months. I'd have made some pretty good money. Or I did it for a month later, I would have gotten all my income and stayed with me.
Yeah.
So either way, I get either the stock I want, the price I want, or I get the income from the option. Mm-hmm. Either way, I'm a happy camper.
Yeah.
And that's where you can use these kind of metrics out there. Is it foolproof? No, because if it was, we would just sit there and do this. Look at this. Look at the money flow index here. It was sitting at 80. Where'd it go? Sideways. And then went up, straight up from there.
Yep.
But this one was coming off of, this money flow index was, it's actually still big volume there too. Guys, there's no right or wrong way. Do what makes sense to you. That's what Mo and I do. Mm-hmm. We still want to own the stocks we want to own, but we want to buy them using puts, and we want to buy them at the prices we love. I'm not screaming to buy Meta at $200 a share. Am I fine owning it? Absolutely. But I don't think it's some screaming deal where I'm going to add the position. But $100 a share?
All day.
Totally different situation.
Yeah, $130 a share.
Totally different situation.
Yeah.
And Meta was at 88 on November 4th. I bought on October 28th and November 4th. Not to say I caught the bottom to brag, just to say like, hey, I was consistent. It fell further. I bought more. That's all I did. I just wanted more and more shares.
Yeah.
That's it. So
it's very simple.
It's simple, but not easy.
It's simple, but not easy. The idea is simple. Executing the idea and the emotion of it is the hard part.
Yeah, because at the end of the day, you have to be okay buying Meta when you had it at 195 and buying it at $88.
And when you're at $88, I
all
mean,
the news.
And look at this. This is $88 is down here, and you're saying this is the lowest price since 2015. You're like, oh my God, this thing is going to go to where it IPO'd somewhere down here in the 20s. And at that point,
that's how you feel.
That's how you feel. And when it is falling like this, look at this fall. This is from $375 to $80 in a very short period of time. And you're saying, oh my God, this thing could literally go to zero.
And that's the emotion.
That's the hard part.
That's the hard part about investing. It's not the numbers.
Especially when you log on to CNBC, Yahoo, and you see everybody's just, they hate Meta. It's a dead company. And you start second guessing yourself.
You know, we should add to our software.
What's that?
We should add to our software like a blind version, because we did the blind stock analysis. True. We should tell people, click the blind version and only sort based on metrics that you like. We won't tell you what the stock is, but have you determine the price of the stock. Now, that doesn't mean you go buy them, because there could be an industry that's just absolutely failing. And you have to understand that. You know what I mean?
Right.
But you've got to remember, guys, the hard part about investing is not the valuation.
Right.
Seth Klarman who wrote? Seth Klarman, I think he wrote. He said, you better believe that if stock falls, you have to be normal, which means getting scared when the stock is falling. We get scared too, as Seth said. We do too. Whenever a stock falls a lot, I go, okay, am I wrong here? Maybe I am. Look at Sleep Number. I was like, man, what am I missing on Sleep Number?
Yeah.
Because I'd bought it like 55 or 60 and it fell and I exited at like 34. I lost almost half my money on that deal. Right. I was like, damn, what did I miss on it? I'm like, okay. So you sit there and get somebody else's opinion and somebody you trust.
Yeah. Like if you were to pull up something like this, even ignore the green check marks, looking at that, wouldn't you say, yeah, I'm going to take a deeper look at this no matter what it is?
I mean, I'll be honest with you. That 5-year PE isn't screaming amazing
screaming
to me.
Deal.
No, it's not.
But this is probably screaming.
Yeah, that's looking really good.
You don't know about this, but this you're screaming. This I don't know about. It depends what the price of the stock is.
What's the market cap?
Market cap about $500 billion.
So yeah, I would look deeper. You know why? Because it's a big company, and I have no problem paying. If it's a big company that has those metrics, I'm okay with that. If it was like a $5 billion company, I'd say, you know, maybe if I don't see the growth there, because the growth isn't. Where's the growth? Yeah, revenue growth of 6. Oh, see, that's the thing. Oh, Meta. You just showed me who it was.
Anyways, but that's the idea.
By the way, look at that.
Thing about blind stocks.
Look at that, though. I was like,
you don't need to know the company yet.
But I wasn't even immediately like, yes, I got to get into it. But I went and looked at Meta. I'm like, wait a second. But then you look at the more detailed story.
Right.
Spent $13.5 billion last year on Meta. Big time decrease in their earnings, but okay, $40 billion buyback in a company. I can understand that. Okay, it makes sense.
Guys, if you want this software right now, $7 for 7 days. We're running a special during earnings season. $7 for 7 days. And for that emotional part, that's what the community is for. Come in, talk to people. When there were plenty of messages flying around with Meta the other day.
Of course, there's going to be.
And people were like, what do we do? What do we do? But everybody was there to talk each other off the cliff.
Yeah, because we're not here to tell you what to do.
Nope.
We're here to teach you how to fish and to use that opportunity to go talk to others and teach them how to fish and everybody build on themselves. Thanks, guys.